All right. We're back with the Emerald Financial Group, or EFG podcast, after an extended hiatus of a week. Not really that extended, but...
Good hiatus.
Yep.
Had a good sleep.
Yep. When the world needed us most, we were gone, disappeared.
But they know we were there.
They know we were there, watching over, like
over.
a guardian angel or perhaps a Batman.
Exactly.
Yeah. So we're back, and it's been a crazy period. It's been a pretty volatile couple of weeks. We've seen big selling in US markets. We've seen slightly less selling in our own markets. A lot of people asking the question, is this the bottom? Should I sell? Should I panic? Should I perhaps give up all my worldly possessions and move to the outback and wear a loincloth and start trying to live off the land?
You're a prepper, Sam.
Have things gotten that bad, Mike?
Well, I'm probably turning into a little bit on the bullish side. So how I see the market at the moment is everybody, Powell, is the Federal Reserve Governor, is very, very hawkish on interest rates. Mm-hmm. And everybody in the market, I think it's sort of consensus that there's going to be 2 0.5% rate rises, June and July.
Yep.
And I think the whole market is saying we're going to get these rate rises. Powell is saying it with conviction because he wants to scare us, but the whole market is waiting for, we've gone too far. So on that line last night, one of the Fed governors said, look, let's do 3 rate rises, 0.5% each, 1.5%, plus their current 0.8, which sticks it up at about 2.25% for the cash rate. And then we might sit back and think about it to see if the inflation numbers are coming up and some demand destruction is going to be there. Now, that's the first time I've heard a Fed governor back off a little bit.
Mm-hmm. Absolutely.
And the point, don't quote me on this, but over the last 12 years, out of the 12 governors, there's not been one dissenting vote against the consensus view. So it's a cabinet, so to speak, fully bought and paid for. They all agree with each other. So if one says something, they all agree with it. Mm-hmm. So I think what what Powell's trying to say, he wants to be seen as Paul Volcker in 1980. And what Paul Volcker did was he took interest rates to 20% in 1980 to kill the inflation rate, even though it was bad for the economy. And he's the only one who had the guts to do it. Now, and in hindsight, Paul Volcker saw 20% interest rates, and we've been in a bull market on interest rates for those 22 years. Now, they say that Powell wants to be seen as to be as strong as Volcker, and it doesn't matter that he's going to hurt the economy a little bit. Yep. So that's where he's getting his gusto from. But at the end of the day, I think the market tends to agree that he's going to do 2 or 3 rate rises, and there's going to be a pause. Now, I have a very close look at the bond market in the US each day and the Australian bond markets, and the bond markets, are multiple times bigger than the share market. So I tend to take their view as being a little bit more accurate than the share market. And you can look at the, as I often do, is look at the forward inflation rates that the market's predicting, and it's tending towards the low 2%, 10 years out, 20 years out. So I think consensus view in the bond market is inflation, they did think it was going over 3. Now I can see the market saying it's coming into the low 2%. That sort of dovetails in with let's have a few rate rises to cool down demand, cool down inflation, and we'll have a think about it. And I'm seeing that because the inflation expectations are low, and the long-term bond rate in the US is about 3%, a higher interest rate is a good indication that the market thinks there's going to be growth coming. And I'm actually a bit bullish on growth, especially in America, because now that globalisation for the past 40 years is probably reversing, that America's going to, and I've talked about a lot about re-onshoring manufacturing. America is independent with oil. They're independent with natural gas. They're building up their natural gas ability to ship the gas over to Europe to compensate for the Russian.
Yep.
So I'm
and take advantage of those prices as well.
and take advantage of that prices. So I did a little bit of homework on those prices because Europe quoted in megawatt hour on the natural gas, and the US quoted in BPTU, which is a British thermal unit.
Yes, that's true.
And I had to work out the conversion rate. And it was roughly a number similar to pi, which is 3.14. Anyway, numbers aside, so the Europe natural gas prices is about 28 BTU and $28, and the American price is currently $9. Now there's a massive disparity, and the reason for the disparity is that America can't send their gas over to Europe unless they liquefy it and stick it in a boat and ship it over. They haven't got the facilities.
Yep.
But in 2 or 3 years' time, they will.
They will.
And if you want to have a trading idea, we trade natural gas futures out of the US market, and the spot contract's quoting at about $9. So you can put a position on natural gas futures or an option. So.
Yep, absolutely.
You can trade it.
Absolutely. And, we would expect those prices to equalize eventually, like you said, in a couple of years' time. And I do want to go back to what you said earlier, originally the COVID situation, but then also the increase in transport costs and the issues that China have faced. Really, I think they're going to drive an onshoring, not just in America, but particularly in America,
around the world,
and trying to bring all that manufacturing and stuff back on shore, because it is so vulnerable to energy cost spikes and lockdowns.
And whether you like it or not, the US dollar has re-established itself as a major currency in the world, a la the US dollar index, which is a year ago was 89, 90. The index got up to 104. Pull back a little bit, but you're seeing good weakness in the Chinese yuan against the US, a 20% weakness for the Japanese yen against the US. And interestingly, as an aside, the only main strengthening currency is the Russian ruble.
Yes, absolutely. It's rocketed, really.
Yeah, it has. The Russian ruble was about 80 rubles to the dollar. It weakened to 150 rubles when the war was announced. But the Europeans are still buying the Russian oil and gas through the side door. And so it's strengthened from 150, and at the moment it's quoted at 60. Now that's quite a good appreciation. And because Europeans are still need the gas and oil.
Absolutely. I do just want to go back to something you said earlier, that the bond market sort of suggests strong economic growth in the future for America. Something I've believed for quite some time now is that over a longer term period, growth is positively correlated with interest rates. And Correct. I think that you've seen the reverse of that in, say, Japan and in the Eurozone.
Correct.
Ultra low interest rates have killed economic growth. And I think we could eventually see the reverse from a period of higher interest rates, stronger economic growth.
So I'm going to strongly agree with that. What you said is right. There is when interest rates are falling, the people I prefer to listen to will tell you things are slowing down. And Sam just said higher interest rates mean a stronger economy. So how I would look at that, so I've got a 10-year bond rate. It's actually about 2.75, 2.8 today, but the inflation rate's about 2.3. So therefore, the real interest component is 3 minus 2.3. It's about 0.7 positive. Now we haven't had that for a long time, and if the 10-year bond rate goes to 3 or 3.5%, and inflation expectations are low, the market's telling you there is growth. There is real growth in the economy, and and people thinking, oh, look, let's take interest rates to zero. Let's see what happens. Well, I can tell you, rates down at zero the last 10 years hasn't been a great thing for our economy, has it?
No, we've stagnated. The Western world has stagnated, and the answer has always seemed to be, well, let's try a bit lower, let's try negative, let's try quantitative easing, and they couldn't buy economic growth in the past.
And Japan can't either. I mean, for goodness sake, it's doing a hard cap on Japan's doing a hard cap on 10-year bond rate at 0.25%. Even though they've got higher inflation numbers coming around, it's the only central bank targeting 10-year bond rate at 0.25%. And if you're a pension fund and you're trying to match some performance, well, the only way you can get any sort of return is take your money overseas
and buy up US dollars.
Yeah. And the other, overall, I think what we've seen is 15 years, there is a deflationary environment out there. The two drivers of deflation is population growth, absolute population is falling back. Read somewhere the other day where the 1.25 billion Chinese, whatever the real number is, it'll pull back to 700 million in 10 years. Japanese population is going backwards. That's deflationary. And the other big deflationary factor is technology.
Yep, absolutely.
And technology progress has been fantastic.
Yep, definitely. And, we talked about onshoring. I think that's going to be facilitated by technology. When all these large companies onshore back to the US, it's not going to be in, huge labor capital intensive situations. It's
the robotics are coming in. There's massive efficiencies. You read any stories about Amazon warehouses, about Tesla gigafactories, their production facilities. There's a serious amount of productivity out there. There's a serious amount of productivity in farming. The number of man hours to farm an acre of land is, is minuscule compared to the old days. So, and technology is not slowing down.
No, absolutely not. And it's not slowing down at all.
So underlying deflation in the system, and we obviously have had the supply side price increases. Always an argument in the press and everywhere how what is inflation, and people say, well, there's two types of inflation. There's monetary inflation, and there's supply side inflation. But to the everyday person, well, prices are going up. So, and the argument against lifting interest rate from a few people is, well, if you lift interest rates, how will that increase supply? Well, the point is that those supply inflation numbers can roll out over a couple of years. You would imagine the system can sort out its bottlenecks.
Absolutely. And, while the supply won't be improved, the demand can definitely be lowered regardless, and it will be.
And it will be.
I mean, US first quarter GDP is coming out tonight. It's expected to show a contraction of 1.4%.
Is that real GDP?
Well, real GDP would be even worse.
Well, that's the point.
That's just the headline number.
Yeah.
And that'll be the start of it, at least in the short term.
Yeah. So I think the equity market is a forward-looking machine. So you can feel very bearish at the moment. New Zealand lifted their cash rate to 2%. I think their mortgage rates are about 5.5%. The articles I read are indicating a good slowdown in growth in the New Zealand housing markets. I think the home prices have come off about 5%. The Australian market, at the end of the day, the interest rate's not that high. The actual interest rate is not that high. So we really haven't seen the pain, but to the real estate people I talk to, they are very nervous. They think that the person who might want to sell will sell over the next 12 months. But at the end of the day, I still think, there's still a supply shortage in housing.
Absolutely. I mean, some of the strongest house price growth in Australia's history came when, interest rates were above 5%. In the late 90s, early 2000s.
And maybe it's how I'll try and trade. I'm trying to trade at the moment, and talk to my clients about trading. Is look, we got some bad news over the next couple of months. Picking bottoms, we all know what happens when you pick bottoms. It's
smelly fingers.
I didn't say that, Sammy. You're sounding like Ricky Gervais. But I think there'll be a time where there is. I think I'm seeing value, especially in the small caps.
Yep.
You're a fan of Aeris, for example.
Aeris Resources, yep. Did a capital raise, oversubscribed at 10.5 cents. It's now well below that 9.5 cents, but great value there at 9.5 cents. Producing miner, copper, gold, Yep.
And seeing good value. One of the small caps we look at when we do work for is Healthier, they've got well above $2. They're trading closer to $1.60 at the moment. Some good values there in a medical field, which I think can be seen as
pretty resilient.
And they're paying dividend.
Yep.
Another company we were looking at was Reckon.
Yeah,
the bookkeeping company of all things. Last week it was valued at 100 million market cap, and it sold off about half of its business for 100 million. And it still keeps basically the other half of the business for free based on the market cap. So I think there are good opportunities out there.
Yeah, absolutely. I think to paraphrase some of the greatest investors ever, you've got to be greedy when others are fearful, and vice versa.
A nice Warren Buffettism.
Yeah. And plenty of people happy to rush into the market late last year. Not a whole lot of people happy to rush in now, and the contrarian perspective often pays off.
Now it's very hard at the moment to buy negative cash flow growth stocks. But I think in the there are cash flow positive stocks out there. So, Sammy, whereabouts are you on the value side or the growth side?
I'm always have been, always probably will be. I'm a value-based investor, and it's much more logical. You can base your investment decisions in harder facts, harder numbers. I'm a numbers guy.
Yep.
And you're less exposed at times like this. So growth stocks, they're far more room to the downside because they're pricing in so much of the future. When the future outlook starts turning a bit negative, it means that there's more to come out of that company.
So the growth stocks are very much like a roller coaster.
Yep.
A lot more exciting to ride. Going up feels good, but going down, you lose your stomach.
Yep, absolutely.
And you might be forced to sell something. Notice Tesla, up around 1,100, down in the 600 range at the moment. Rivian in the US, electric car maker, pumped up to 110 US, down in the $20 range at the moment. Quite a few small caps. The growth, negative cash flow stocks, really getting punished.
Absolutely. The NASDAQ index itself is off 30%. The S&P 500, 20%. The Dow Jones closer to 10%. So it really shows you the story there.
Yeah, the interesting thing about the NASDAQ, top 10 stocks are the ones Amazon, Facebook, all the big name cap stocks dominate the NASDAQ 100. But interestingly, all the NASDAQ 100 stocks are in the S&P 500 as well. So the S&P 500 does suffer from those technology stocks have been sold off just out of interest.
Yep, absolutely. And so that's down 20%. But the more value-based, more traditional, mature blue chip stocks on the Dow Jones only down about 10%.
Yeah, correct. Interesting one I did follow was Disney. We were picked up following it at 130. Sort of got to that 180, 190 range, but now it's back closer to 100. So you would have been a bit more positive on Disney, but it looks like those streaming services have got a bit of a flip around the head. They've
taken a hit, and I think that the Netflix subscriber numbers really sort of dented the confidence in the sector. And everyone assumed.
Wait till you watch Ricky Gervais' latest Supernature. Share price will go back up. Very funny show.
Jump on tonight.
We won't do any Ricky jokes at the moment.
No,
because it's not appropriate.
No, not at all. But
so we've had the election, Sam, and do you want to sort of finish up with saying, do you think anything from a share market point of view you can see coming out of the Labor victory?
Look, I'd be keeping a very close eye on childcare stocks, things like that, aged care stocks. Just waiting to see if there are any policy changes or anything like that. Those are two areas I'll be watching closely. On the green energy side of things, I'll be watching that very closely. Especially, look, we're a big fan of Fortescue in this office, but for the longest time, they're only valuing the iron ore business. If we do really see change out of Fortescue Future Industries, and perhaps with something involving the government in terms of a change of policy, you could really see a revaluation of Fortescue as they start to attribute value to Fortescue Future Industries.
So the interesting thing out of the election is, you've got the Labor Party, the Greens, you've got the Teal Independents, Teal being a combination of blue and green. So we're going to see some strong environmental policies coming along. I don't think the impression I get from the Green movement in Europe, I don't think they make the best business decisions. They'll make the best decisions for the client. Did I say that nicely?
Yeah, that's fair enough.
So, Germany's closing down their nuclear plants. Why wouldn't you? They haven't got any replacement for it, so a few people might go cold, but you should have an environment policy. So I think, not being flippant about it, is that in the environmental policies will conflict with business in that it could be value destroying for some people. Some companies that are positive in the environment and can show a good business case, I think, will do very well. The downfall, I think, in the environmental is that the companies are not the material companies. They're not doing exploration because they're more relying on their reserves. And if you're doing exploration, that's very much more carbon intensive. So those big companies are managing their balance sheets in terms of using reserves and managing their balance sheet by paying dividends and doing buybacks. So I think there'll be bottlenecks that if there's a lack of exploration in the short term, I think there'll be problems in the long term. Makes me a bit more bullish on
commodities.
On commodities.
Absolutely. And I think already we're seeing some of those bottlenecks, some of those supply shortages. And you've got to keep in mind that, global manufacturing, Asian manufacturing, still probably a little bit weak, and already prices are starting to really push up. And I think this is a big problem of the sort of mid-2010s, late 2010s underinvestment in mining exploration. Is you're going to have massive shortages of aluminium, of copper, of zinc, tin, cobalt, nickel.
Correct.
Across this next decade.
And a catalyst of that lack of exploration, as I say, is because if you're an exploration company and you're trying to raise capital, well, good luck if the fund managers have an ESG policy that doesn't let them invest in your business. So I think... But a bit like the tobacco companies 20, 30 years ago, that they actually were good investments because a lot of the market wasn't buying the tobacco companies. But I still think they could have been a good investment. Yeah,
absolutely. There was a Vice fund set up in the US that invested only in,
they got busted.
Negative industries, tobacco, oil and gas, and it outperformed the index for a very long time.
Yeah. So the other thing I see, I think the new Treasurer Chalmers was saying that they're going to be fiscally conservative. Does that mean that they're going to take the current deficit projected in the May budget at 80 billion? Will he take that back to try and create a surplus out of that? In the background, the Labor had much more progressive tax policies and franking credits, family trusts.
I think that deficit will be naturally improved
through the iron ore price.
Through the iron ore price, which has dramatically exceeded federal government forecasts. So whether they spend more than the improvement they get from that.
So we look at both sides of the profit and loss, the revenue and the expenses. So if the budget comes into surplus or close to the surplus, from the revenue side, we'll know it, and we'll be keeping an eye on the expenditure side to see what they're spending the money on. So that's an interesting thing. And will Labor bring back a few of those scary policies from the last election?
Well, look, we'll have to wait and see.
Scary in terms of me paying more tax.
We'll have to wait and see. I mean, look, they may get the majority. My personal seat of where I live, McNamara, is probably the deciding factor for them on that. But even if they do, it'll be a very mixed Senate that they'll have to get any bit of legislation through.
That's right. So we've got an inexperienced bunch of independents. Teals. You got the Greens in the inner city. You got Labor. The Liberals probably have to rebuild in the outer suburbs. Probably can leave the inner city to the Labor and the Teal. National Party's got the country electorates stitched up. So Liberals just better go give Frydenberg a new seat, parachute him in somewhere.
Queensland or something?
No. Got to keep him local. But the best chance for I think the Liberals to get back in would be Josh Frydenberg to come back in and start actually going out and talking to the outer suburbs.
Absolutely. I think they'll struggle under Dutton. And I think you were saying the first leader of an opposition party after losing an election has never been made Prime Minister.
I remember Wayne Swan. Don't think I can say that of Mark Latham, but he wasn't popular either.
No. And was it him or was it Kim Beazley?
And Kim Beazley got, I think, what did Bob Hawke do when Paul Keating spat the dummy back in the early 90s? So because Paul didn't get his shot at the lodge, he resigned. So I think he made somebody like a Kim Beazley treasurer or something like that. Politics are interesting.
Absolutely.
And let's wait and see. Let's see how positive Labor is for our economy.
Absolutely. All right. Well, I think that's a good place to end it. Probably, hopefully, we've enraptured you with our takes on everything.
Or not.
Yeah, or not. Or maybe we've enraged you.
Oh, that'd be good. Good if you
hopefully,
enraged you.
We've done some sort of strong emotion, strong enough for you to leave a comment, perhaps, and a thumbs up even. Because that would really help us out a lot. And
it's like Sam's got a nice beard, something like that.
Thank you.
That'd be good.
And if you do leave a comment, feel free to ask us to cover something, to raise a point you'd like us to discuss, or even to raise a disagreement, because we love the engagement.
Yep, love the engagement. They're only opinions, and they're all open for discussion.
Yep, absolutely. All right, we'll wrap it up here. Thanks for your time once again, guys. Thank you, Mike, and we'll see you in the next one.
Catch you next time.